GM everyone, welcome back to another episode of Touch Grass Podcast. Today we have Annabelle from Atlius Labs. We've been trying to have Annabelle for weeks now, and someone we've been excited to kind of have on the show for a while. But yeah, we're finally here. Welcome to the show, Annabelle. How are you doing?
I'm good. Thanks for having me on.
Awesome. So yes, we've been seeing like a lot of new chains popping up, very enterprise based, very institutional based, but they all lack. They're all doing their own thing, but they don't have the same performance that you need. And Atlius Labs, they are trying to build the infrastructure to improve the performance in various ways. And before we dive into that and what you guys are doing, one thing I found interesting about your background, Annabelle, is you worked previously at Amber Group and you kind of transitioned to a founder. That's kind of interesting transition to make. Can you kind of walk us through your kind of background at Amber Group and how when you decided to start Atlas Labs and what was the transition like?
Sure. And I think actually my whole journey started even before Amber. So, what drew me initially to blockchain and crypto was DeFi. And I was building uh, in very early DeFi days, kind of like 2017, 2018 era. That was we're building one of the first dexes on Ethereum. That was way before even Uniswap was around. And the two fundamental bottlenecks I saw back then to really have more on-chain adoption, whether it is trading or any other use case, one is liquidity. There were not that many players that know how to even access anything on chain or market makers that are willing to trade on chain. And second, and related to that is the infrastructure gap. Of course, it's been almost a decade. We have made we've come a long way, but from my perspective, around 2018, that's when I realized, okay, I came from a traditional investment banking trading background. I should try to focus on the liquidity part, which is why I joined hands with the Amber Group co-founders and really focus on building Amber into one of the leading market makers, not just on centralized exchanges, but also on decentralized venues over the years. And we're lucky to really catch on to the early DeFi summer wave and continue to optimize our own infrastructure and offering and help improve the liquidity of the markets overall. And then it came 2024, and that was really one of the defining years where that was the year where there was a lot of the crypto ETFs being approved. We saw a lot of my old colleagues now, at different banks now also doing our assets on chain or offering crypto trading products at the bank. And that was a sign to me that we've pretty much solved the liquidity problem on chain. There is all of the top financial institutions, hedge funds, HFTs that are already very active on chain. So what is really the next set of bottlenecks that we are still, there's still a gap, and I myself can actually find another niche in. And I think that goes back to the original two parts, which is the infrastructure gap. I know a lot of people argue that we have too many chains now, the infrastructure gap is done. But in reality, if we're looking at use cases and the infrastructure that's supporting each use cases, you can see that we're still far away from being perfect. But of course, the way that we build and look at infrastructure should be really different. We shouldn't just be launching generalized chains for the sake of a chain, but we should really think of infra at the surface of the application and the use cases. And this is where the idea of Altius is born. And I think being almost like a second-time founder, well, this time with a much smaller team, definitely is a very new experience. I've learned a lot, especially on the infrastructure side, because even at Amber, of course, while we try to optimize our own trading operations, we have to look at infrastructure a lot, especially on chain. But going deeper down, looking at the execution layer, consensus layer, looking at the networking, how do we really optimize performance? Is it similar to a high frequency trading
Yeah.
style optimization? So it's familiar, but also applying that principle to an even more decentralized system like blockchain. is a fun challenge. And I'm lucky that I have a great team of engineers. A lot of them come from Hudson River Trading, which is one of the leading HFTs globally, to really apply their expertise to the problem we're trying to solve.
Yeah, I was just going to ask the other co-founder, as part of Atlius, was a part of the Hudson River team, and we've recently seen this, group of interns doing while, Jeff from Hyperliquid is also.
Yeah, yeah, yeah. That was, I think, yeah, my co-founder told me that this was probably one of their first batch of interns. And then they were giving, some trading competitions with like, I don't know, $100 fake money to trade, and look at where they are now.
Yeah, 100%. I was just gonna ask, like, what is it about quants building high performance systems that has just made them so different? Almost everyone who's building high performance blockchains or these, distributed systems in the space, all of them, I think the one similarity they have is they have quant background. What is that translation you just mentioned? Is it in terms of skill, or is it because they just been used to creating these algorithms that kind of translate? What's that like? How does that actually
Yeah,
apply?
I think it is really the school of training, right? And really, the KPI for HFTs are just so clear. Every second, millisecond, nanosecond gain, you can see direct P&L. So this is a world where you're directly, purely incentivized by every single optimization you can do. So I think there, the team there is just really, especially my co-founder has been there for was there for 14 years. So this is all he focused on. And I think there are a lot of learnings and takeaways you can apply, because at the end of the day, these are all distributed systems. It's all computer science principles. Of course, blockchain has its own challenges. How do you coordinate across, very decentralized networks or nodes? So that's even like an added challenge. So almost you have to be able to solve in a centralized way before you can tackle in a more decentralized way. So I do think they been through rigorous training. It's battle tested, because if it's not rigorous, you just see your P&L go down, right? So it is a pure incentivization.
Yeah, 100%. I think there's like that shift in between engineers and other kind of verticals versus someone in quant. They're just trying to optimize and just remove everything that's not needed. I think that kind of just applies to scaling the blockchain as well. That's what we've seen with Hyperliquid. Like they didn't, they have these all other variables. They just focused on performance. But yeah, I think now I want to get to what you guys do. Uh, what is Atlius Labs actually? How do you guys help teams? And yeah, where did this idea hold start?
Yeah, so we've been on a journey to initially, we had the idea to really apply some of the HFT learnings to how to optimize blockchain systems. And then we're looking at the bottlenecks of performance of blockchains. A big part of that is database IO. Basically, how do you read and write into the Merkle tree when there's a lot of coordination happening? And then second is around how do you actually schedule and execute the transactions. So of course, there are the principles of parallel executions, where you can execute different transactions that are independent of each other, and at the same time concurrently. And then also similar ideas can be applied to the database. You can read and write into different parts of the database that are touching independent data. So we started with that. It sounds simple. It's actually pretty big undertaking, especially if we want to actually remain compatible with existing systems. So a little different than the Hyperliquid idea, where you scratch the parts that don't work and you don't worry about compatibility because you're building for your own system. We still want to see how we can push the envelope on the existing systems and see what optimizations can bring. And then on the other hand, we can also build more custom-made environments to really push the limit of performance. So we spent a few months working on that, and since then we also expanded our product to not just focus on performance itself, because what we realize is that now with the institutional adoption, there's a lot of enterprise attention on RWA stablecoin, and of course infrastructure as well. And a lot of companies actually want to own their infra. So we've seen Stripe building Tempo, of course, Circle building Arc, Robinhood building its own Robinhood chain as well. And I think that inspired a lot of other enterprise to want to do the same. So our goal is to not just optimize existing systems, but even how to build one from scratch.
Yeah.
So how do we help these more maybe Web2 players with existing distribution to enter into Web3, to help them build a chain in weeks, not years, and without having to maybe hire your own 100 people team to do so. I think there's a stigma around, maybe misconception around how expensive or how long it needs to take to build your own infra, but that's no longer the case. So we focus on building a blockchain customized for the use case that they want to see in a cheap and fast way. And of course, we have the future proofing where they can continue to scale without worrying about with performance limits.
Yeah. I mean, especially with all this, I mean, you already mentioned some of the names, Tempo, Stripe, and Circle kind of getting into their own game. They obviously have like different risk profiles rather than your regular L2s, and they want certain things that are compliant in a certain way. They want certain things in terms of performance. But Annabelle, like performance, we always say we have this stupid chart about comparing TPS about across all chains, which is probably not in 2026 not the accurate way of understanding performance of a chain. Like, how would you guys at Atlius describe performance? Like, how do you? Is there a metric or is it like a combination of things? How do you guys like analyze the performance of a chain? I
Yeah,
know that TPS.
that's a great question, really. And I think there's also a lot of misconception, right? Oh, we need a fast chain that's just high TPS. But then all of those metrics, if you look deeper, it really depends. So if you're looking at payment, and maybe TPS matters because a lot of times it is just token transfers, right, to independent wallets. But if you're looking at trading, especially if you need to execute very sophisticated smart contracts in terms of matching and trading. And then you cannot just look at simple TPS metric. You have to look at how much data or how much information you can process per block, and that's sort of the gas per second metric. And a lot of times, maybe the blockchain itself doesn't need to be one for all, right? As what we've seen with Hyperliquid, you can optimize the hypercore specifically for trading. And then you can settle on your L1 or Arbitrum, and maybe that performance doesn't need to be as crazy because a lot of this comes at a cost too. So what we're looking at more increasingly is how do we build a hybrid model where we can use a traditional EVM L1 as settlement, and it doesn't need to be the ultra performance as long as you guarantee certain settlement time, and maybe that's where a lot of the regulatory compliance or privacy needs will need to be enabled. But you can have another environment that is just super focused and just optimized for trading purposes, for example, and all of them can be processed there. So low latency, it could be millisecond level latency. It could process a lot of trades at once before it's settled on the L1. So I think we could get to a point where we have the best of both worlds, where traditionally it's a trade-off between centralization, decentralization, or trade-off between maintaining EVM or SVM compatibility and having this ultra-fast performance. If you're Hyperliquid level, then you don't get EVM. But can we actually marry that? And that is what we're looking into and building.
Yeah. Like, is that a good example? Let's say for Solana, where they are not hybrid at this point. That's why they're not. That's when they're not suited for perps at this point. Like, is that like a good comparison where Hyperliquid has this hybrid stuff for hypercore, and the settling part doesn't need to be high performance, but whereas Solana, everything is the same. Is that like why they haven't been early to perps in trading stuff?
And I think that's a question that Solana Foundation is asking themselves every day as well, and looking at solutions. Of course, they are actively building. They're introducing a new open glow for consensus, doing MCP, a lot of the things to really improve the overall performance on the Solana chain side. But to your
Yeah,
point, I think there is still a limit to what that can do. And then that is still shared block space. It's not just, for one application specifically. So it is a conscious trade off. And then I think there are probably ways to really think about that. Having maybe build a specialized environment for the perps or other trading to happen while still settling on Solana. That's
yeah.
also yeah, something that could be done.
Yeah, 100%. I think that's where your earlier point about how performance for everything is different. Like Solana is high performant, right? They are a fast chain, but when it comes to perps, they're not there yet. And we're just seeing good signs of life with new kind of Phoenix Trade and others. But I think, yeah, that kind of comparison works well. Uh, but yeah, a good segue to this, Annabelle, is we've seen over the last 3 or 4 months people debating L2s, L1s, Ethereum coming out and saying they made that article. I mean, everyone is still kind of supporting Ethereum and whatnot. But there's this kind of confusion like, what's going to happen with all these L2s? There's too many, obviously, but there's still cool things being built on top of it. So, as someone who's helping these teams, walk me through like the behind the scenes of these conversations where these big shifts are happening in the space at the intra level. How does that impact you guys, where an L2 now wants to be an L1? What does that look like for you guys?
Yeah, it's interesting because we really built our stack to be modular from day one. We never wanted to launch our own chain. We really wanted to just be the infrastructure partner to power other either existing or new blockchain ecosystems. And of course, we've seen this shift from L2 to L1. I think partly is because people realize L1 is not that much more expensive or harder to launch, and then you retain a lot of economics and sovereignty, which is also why LTS we build the LTS L1 stack as well to really work with some of the enterprises to build their own sovereign L1. In terms of L2s, to be honest, I think a lot of the more general purpose L2s will have a tough time unless they can really find their own star application. Otherwise, there, or I think that applies to even other L1s as well, right? If you don't have user distribution, then it's hard to justify your ecosystem value. So for us, we actually wanted to work with the players with existing distribution and really be the infra partner there, as opposed to spending too much time focusing on specifically the EVM L2 part.
Got it. And do you, like the teams you're working with? Obviously, they want their ecosystem to be diverse and whatnot. Like do those talks start very early to begin with, where we want these kinds of apps to be like the main focus of our chain, and we're going to do everything in our power to power that? And is that like how you kind of go on about and design the infrastructure, or the main
Yeah.
focus is performance and whatever comes on top in terms of apps is something later on?
No, I would say it's very much use case driven. I think it should be this way as well. We shouldn't just build for performance if we don't know who's going to be using it, right? And like I said earlier, performance comes in so many different forms for different types of scenarios. So yeah, so I think who we're working with now, some of them are, for example, fintech or payment companies, and they want to focus on the part where, of course, the performance matters for payment, the cost matters, but also many other features that are specific to make payment, or even building tooling for agentic payments. And that's very different from our conversation around how to optimize an infrastructure for trading. And that's where maybe the hybrid architecture can come in. So yeah, I would say it should be, and I'm glad to see that it is more use case driven now.
Yeah, another thing I think everyone is super excited about use cases is RWAs. We've had tokenization of stuff, we've had equity perps, we've had spot listings of different assets, and we had pre IPO stuff, which are a little shaky, but on chain, but they're still kind of seeing good innovation there. Where do you think what's like the state of RWAs on chain right now? What's like the bottleneck for these things to kind of explore? Because there's obviously interest, right? Like the stock market in the US is just up only, everyone wants to be a part of it, but the access to it is still a little limited. Like, for example, somewhere I'm in India right now and I want to buy Micron immediately, right? I can't do that and I don't want to use leverage. Like, how do I do that, right? So there's so many constraints. According to you, like what's that bottleneck and where are we with RWS?
Yeah, I mean, I've seen really, I remember early days, like maybe the 2017 cycle, there was the STOs, right, the security tokens, and then now it's RWAs, and I think the quality of the assets that we're bringing on chain is so much better now. Of course, we have the US dollar stablecoin, and we have a lot of the on chain credit funds or money market funds that's really just bringing US Treasury yields. But it's popular because, like you said, maybe outside the US, we don't really get easy access to a simple product like US Treasuries. But if I hold USDC on certain platforms, I could get, the 3 to 4% yield. And then we see that seeping into more like private credit as well. So not just the treasury yield, you can maybe even get access to other higher yield products as well. And I think what's interesting this year that we've seen is one, I think with the a lot of geopolitical conflicts, people want to trade any assets that's volatile. So commodities was really top of mind, and people could trade that on chain 24/7 as opposed to maybe on some brokerages only 24/5 or even only within the 5 days. And then the U.S. market, especially around AI or AI infrastructure. And then the IPO market, which will see trillions of dollars coming to the market in the US and also even actually in Hong Kong as well. There was the Hong Kong IPO boom. Um, is I think it just really suggests that as long as there's demand and the retail or institutional demand is there, they want access to global opportunities, whether it is stocks, whether it's equity or whether it's fixed income, and they want to find the easiest venue to trade it. And blockchain represents that, right? Where you can have 24/7 market and global access. Of course, there's a lot of the regulatory and compliance concerns, and I would argue that's still part of the bottleneck. So I
Yeah.
think we'll need to see what happens with Clarity Act in the US and how that's adopted globally as well. But we're definitely making inroads, and I think that really was the promise of blockchain, right? To having more global access, open access, and can really quickly bring a lot of these um, assets on chain experiment to figure out how to better price certain things, how to better manage risks, and I think that's really fascinating.
Yeah. Like any chains that you're working with showing these kinds of early signs of traction or any ecosystem you have your eye on, anyone you want to shout out, that kind of having this early traction and interest with some use cases we just talked about.
Yeah, I would say we are still working with a few design partners right now, and some of them are enterprises. So definitely, but, still in stealth. But I'm super excited because it's a well-established fintech company with distribution to emerging markets specifically, and they want to bring a lot of their products on chain, payments, of course, but also on-chain credit on financing. And that's really delivering the promise of open access, global access blockchain to the new markets. And for us to be their infrastructure partner to make sure that we're building for performance, but we're also building for the specific needs, whether it is compliance, privacy, or otherwise.
Awesome. One follow question. I think we're at time. I see that you guys have recently raised from some of the biggest names as well. I mean, we are technically in a bear market. You can say that, even though it doesn't completely feel like one with all the awesome headlines and partnerships we're seeing on the institutional side and whatnot. But any advice for people currently raising in these conditions? Anything, because you've been on the other side as well, on the investing side. What you look for in teams to invest in, and as a founder, you going in raising as well. Any advice there for new founders?
For sure. I mean, fundraising is never easy, but I think the first advice I always give to friends who are also raising is just remember it's a two-way street. You're looking for a long-term partner when they're looking for a founder who they can trust. So just don't optimize for maybe the check size, but really looking for the right strategic partner, and that's going to be more helpful in the long term. And of course, I feel really lucky to have great cap table who's been supporting us through different aspects. Um, and I think second advice I would say is that it's there's always bear market, bull market, up and downs. But and I think really now the market is so much more mature. The bar to be a founder and to build a successful product is much higher as well. So don't chase the narrative, don't chase the hype. Really focus on the fundamentals. I know we all used to laugh at the word fundamentals, but we need to show product market fit. We need to show what the value this brings. Maybe not immediately, but what's the market that you're trying to target, and what's even the ARR revenue metric. These things are becoming a lot more important. I think that's what investors want to see as well. And then I think also thinking about the equity versus the token value accrual piece. And I would personally argue that we might even see a very different model, right? We used to see this bifurcation of value accrual going to tokens
Yeah.
versus equity because certain regulatory constraints. But as now, when investors are also looking for more equity-like features, so maybe token is just a format of how you access the equity, as opposed to the other way around before. So I think it's important to think about those early before um, founders would go and make decisions to launch a token or otherwise, because those will stay with you forever. So it's not something to be rushed into.
Yeah, very important decisions. I mean, that's awesome advice. One final question for you, Annabelle, before I let you go. What's Atlius looking like 6 months from now? What's the roadmap ahead? I know that you said some companies are in stealth. When are those coming live? Anything to look forward to the next by end of the year?
Yeah, so from an internal product development side, we're building towards a hybrid structure that I mentioned to really try to see if we can have the best of both worlds, where you have the performance you need for the parts that you need while still maintain the composability and compatibility with the broader DeFi ecosystem that we have on chain, and also really tackling a lot of the database part as we're seeing more IO constraints there. And from a partnership perspective, hopefully you guys will be hearing from us soon within the 6 months to really announce the awesome partnerships that we're working towards. And of course, we're still looking for more design partners. So if you're building in payment or trading or really anything, we'd love to have a chat and see how we can be helpful.
Awesome. I think Annabelle's active on Twitter. You guys should be able to reach her out there. But yeah, thanks so much, Annabelle. This is awesome. Looking forward to the next one. But yeah, thank you for your time.
Thank you.